It's not our goal to be the biggest. It's our goal to be the best. And I believe that by being the best and by delivering the capabilities and the stability and the experiences that advisors need, all wrapped into the independent model that I think is best for advisors to deliver a personalized level of support to their clients while also reaping the benefits of what they're building in their own business, I believe that we'll continue to see some pretty strong growth.
This podcast is for advisor use only and not to be distributed to the public. The Wealth Consulting Group is an SEC-registered investment advisor, and the opinions voiced and contents in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that strategies promoted will be successful.
All right, welcome to this episode of the Bull of Wall Street. I'm Jimmy Lee, the CEO of the Wealth Consulting Group, and I am super excited to have on with me Marc Cohen. He is Group Managing Director for LPL Financial. And I'm going to let Marc talk about his role. And I want to congratulate Marc because I think it was not too long ago that he was promoted to managing director role, and really in a short time period. I think, Marc, you've been with LPL, 6 years and change?
That's right. Yeah, Jimmy, thanks for having me. It's great to be able to connect with an old friend and someone that we do a lot of business with and be able to talk shop a bit. To your point, I joined LPL a little over 6 years ago. And sit as a member of our management committee leading our business strategy and innovation team. So really in that capacity, our team is responsible for setting the long-term vision for LPL. Where do we want to be? Question we all ask ourselves, who do we want to be when we grow up? But we get to ask it for a Fortune 400 company. And so defining 5, 7, 10-year visions for the organization, and then building the ability for the organization to then live into that and designing what the personalized experiences are that all advisors or institutions can have here at LPL.
That's awesome, Marc. And I tell you, since you've been with LPL, the company has just experienced explosive growth. I mean, new CEO Rich Steinmeier, yourself, and the team, you guys have done some amazing things. And I had a chance to meet with Rich in December. Yeah. He was nice enough to have lunch with me at his office and share with me, from his perspective in his seat, the vision of LPL, which was pretty awesome to hear from the guy. And then, but I also know that you're the architect or one of the main architects for the strategy, obviously, with your role. And LPL is always in the news, Marc, but recently, obviously, LPL has been more in the news with the announced acquisition of Commonwealth, which a lot of industry participants have chimed in on, as you know, and we'll get into that later. But that's really exciting, and I think there are a lot of, again, industry pundits that have chimed in on it. And my personal view on it is, man, what a strategic move. It's like the art of war, in my opinion. And because I believe from the recruiting perspective, I'm out there recruiting folks all day long, advisors to our platform with LPL. And talking to the LPL recruiters, Commonwealth does come up all the time as a very good competitor. And I know that from, the headlines and from what Rich and you have said and other things about Commonwealth advisors, you guys have a lot of respect for that company. I think a lot of us in the industry have a lot of respect for that company. I have friends that are at that platform. And so I want to get into it a little bit later with you, not right now, but more in the strategy and vision for LPL. This podcast is for advisors. I think a lot of industry participants would really love to hear what that looks like. What is your 3, 5, and maybe even longer term vision for what the company is going to evolve into? And then maybe along with that, how you see the industry and how LPL fits within it.
Yeah, Jimmy, it's been a really fun, 8, 9 months since Rich took on the role as CEO, because you have the opportunity there to bring someone who's got an incredible background, having kind of grown up in the McKinsey world and then going over through wirehouses and then coming here to LPL and learning the independent space, now assuming the role as your CEO, bringing his strategic chops and as you've come to understand, his competitive spirit into the leadership seat there to help lead the firm. And you've got a new voice. And so he and I partner very closely and spend a lot of time together where we're really trying to figure out where are we headed? What's the future look like? And as you and many others across the industry have heard from him, we aspire, and our vision for this firm over the coming years is to establish us as the best firm in wealth management, bar none. No asterisks, no commas and qualifications, bar none, the best firm in wealth management. And we think that there's a number of ways that we can get there. And there's things that we need to be doing and working on now, which we are, to be able to set that up. And so if you think of a few of them, the first is that we've really transformed the way that we think about the role of our employees. The traditional corporate construct is that of a standard pyramid, right? The point pointing upwards towards the sky. Typically, you got clients and then employees and then managers and then the leadership team and then the executives all the way at the top, where it's structured in such a way that the employee base is effectively supporting the success of everyone else. Here at LPL, what we've done now is we've turned that on its head. And so while physics may not actually prove that it's possible, we've got a pyramid that stands on the point. And instead, we're abundantly clear in this firm that clients are the most important. It says it right there on that napkin over my shoulder. Then you've got the employees next. And we need to make sure that those employees are properly empowered to be able to act in the best interest of our clients and to delight our clients and deliver a hospitable experience to them. And that they're given the ability to do so. And then managers all the way down to our executive team, our job is to support and be able to create the construct and the environment such that our employees can succeed in delivering that experience to the client base. And with that clarity that we need to support our employees so they can pay it forward and support our clients, I think we're on the verge of a really important transformation of what the service experience looks like and how our clients are able to engage effectively with LPL and be able to pull apart some of the bureaucracy that most large companies would tend to suffer from, and instead lean into a more nimble, personalized type of approach that, quite frankly, you mentioned Commonwealth. Commonwealth has done really well, which you see in their satisfaction scores, but also in the way that they've got a culture of accountability and responsiveness to their clients. Second area is continuing to focus in on capabilities and making sure that we've got the breadth of capabilities that's best in the industry. And then finally, we want to make sure that we're looking at novel strategies, looking at the challenges that advisors have and how do we best solve for those with unique solutions, not going out and doing the same thing that every one of the other competitors might be doing, but looking at those problems from different angles and perspectives, studying firms outside of this industry to try to figure out how do we solve them in a unique way. And you've seen that with the business services that we've launched over the last few years to be able to help advisors run great businesses where they can outsource a CFO or marketing or even their payroll to us. Or on the other hand, our liquidity and succession solution with how we're solving for the needs of advisors as they're starting to eye succession and exiting their business, but they're able to monetize it in a market competitive way while still perpetuating the benefits of independence. And we can obviously talk more about any of that if it's of interest, Jimmy.
And Marc, when you say clients, you're referring to advisors and our clients, right?
Good point. But yeah, for us, you guys are our clients, advisors, enterprises, institutions. That's who our clients are. We're very clear that we do not run a retail business model, much like some of our competitors do. We don't serve end investors directly. We serve our clients who are the advisors and institutions and enterprises. And then it's your job to hopefully be able to leverage the tools that we can make available to be able to best serve the end investor community.
Yeah, and you know, I will attest. I mean, being with LPL for over 10 years now, affiliated with the company in a lot of different ways, and the support that I think us as advisors get from the company and the relationship in terms of who is the client, I think that's clear, and it's been that way for a long time. I think that really is the foundation of the company. Even way back then, I know you guys are embracing that to the next level here. But what was impressive to me to hear from Rich, and now you're sharing it, and I know you guys say best. Best also means you guys want to be the biggest, right? You guys want not just in numbers, because you're almost there now, or you are there now, but in assets. Is that true?
So when you incorporate in Commonwealth into the fold with the growth that we've seen and you take a look at the organic growth story of this firm, it's amazing. Even in the first quarter alone this year, we had 16% annualized organic growth. When you consider the fact that the historical kind of flag bearer for growth in this industry, one of our competitors, grows at about 6% a year, for us to be at 16% annualized is pretty humbling for us. And so we've grown up, and by the end of the first quarter, we were right around $1.8 trillion of assets. You add Commonwealth in, and some additional organic growth we would expect this year. And we'll probably close out this year somewhere in the neighborhood of 2.1 trillion or so. Obviously, don't go trading on that, Jimmy. But as you think about that, that positions us as the third largest wealth management platform in the country, behind Merrill Lynch and Morgan Stanley. It's not our goal to be the biggest. It's our goal to be the best. And I believe that by being the best and by delivering the capabilities and the stability and the experiences that advisors need, all wrapped into the independent model that I think is best for advisors to deliver a personalized level of support to their clients while also reaping the benefits of what they're building in their own business, I believe that we'll continue to see some pretty strong growth. And if we position ourselves effectively as the firm that has the best capabilities and best experiences and meets the needs of advisors in the best way, and we also happen to be the de facto solution that operates inside of the independent space where we continue to see flows primarily driving, we're going to be just fine.
That's awesome. It's very impressive. And just in the last, I don't know, 5 or 6 or 7 years, the company's been very innovative. So I wanted to give you a chance to talk about that. There are many different ways for LPL or for advisors to affiliate with LPL. There's these different channels that you guys have created that are not that new, that have scale already. And so can you kind of talk to the audience of the advisors of different ways that they can affiliate? I know that you have models for people that might be coming out of wirehouses, large teams. Obviously, we're in the large enterprise channel on the RIA side, but go ahead.
Yeah, for sure. So when you think about what we're solving for, Jimmy, and then I'll talk to what exists, but we strongly believe that the investment that we're making into our platform, think north of $500 million per year into new capabilities for advisors in our technology platform to be able to expand their ability to operate efficiently and be able to serve their clients with more comprehensive solutions. We believe that we have a really, really attractive platform to be able to allow advisors to operate. But we also recognize that the platform cannot be looked at as a one-size-fits-all. You can't just suddenly say that every advisor has to come in through the front door and access this platform in the exact same way. So instead, in an effort to be able to meet advisors where they are, be able to personalize the way that advisors can tap into the strength of the platform that we've built out, we've created more personalized experiences where if you look at one end of the spectrum, you could be a W-2 advisor of LPL, maintain independence, meaning you own your own book of business and your client relationships, you brand on your own, you choose your own technology, but you're outsourcing what we think of as employee services. So HR, payroll, benefits, facilities management, some of the technology help desk, like the computers on your desk. You outsource all of that for us to help with instead of you having to worry about managing those operational minutiae. If you want, you can run your own independent business and outsource some of the management consulting to us through our platform services model called Strategic Wealth, where we give you a full management team to help you with running the business. You're the captain, but we're there as the crew to be able to help you run that business and make really strong strategic decisions. You can operate as an advisor on our corporate RIA without any of those additional support services and access them a little bit more a la carte. You pick and choose what services are helpful for you as opposed to looking at it in a more bundled, holistic approach. And you could do that either as a fee-only advisor, as an IAR of LPL's shared ADV RIA, or as a dual registrant, maintaining your brokerage. You can start your own RIA and do that either, again, as a fee-only or a hybrid advisor with the dual registration. You can access a large enterprise, much like Wealth Consulting Group, to be able to access their platform capabilities in addition to LPL's. And there's a lot of complementary skills there where you can have a more personalized, localized experience through the large enterprise like you guys deliver, Jimmy, but then also access the LPL platform. Or finally, you've got a variety of institutions. You have 1,200 banks, credit unions, product manufacturers insurance companies that are out there that access the LPL platform as well. And if you're looking for more of a traditional employee type of construct that maybe has access to lead flow or other support services from these multi-channel firms, you could come in through one of the institutions as well. But for us, the importance is flexibility in being able to navigate among those different support models in a way that allows each advisor to meet the needs that they have at any given stage of their life cycle while continuing to access LPL. And like I said before, we're learning from outside the industry firms. And so the firm that I look at when I'm thinking about that platform model, above all else, is Shopify. Probably not the name you expected me to say. And so when you think about a Shopify, you've got Shopify as the backbone for very, very small startup businesses, kids in their college dorm choosing that they want to sell t-shirts or whatever else that they might want to do, using Shopify for the checkout process and to be able to process payments and for some of their financials. And then on the other spectrum, a lot of firms in between, but then on the other spectrum, you have Tesla. Tesla outsources all of their economic and financial processing in the back end of their digital online purchasing experience to Shopify as well. So you got this massive Tesla, you have the small college kid and everyone in between. And that's a similar type of construct to how we view LPL supporting advisors with different ways that they can operate and different stages of their own career life cycles and their business's maturation to still tap into the LPL platform, just with different optionality.
Marc, how many affiliated advisors are there now with LPL?
So we're at 29, a little over 29,000 advisors today. You add in the Commonwealth folks, and we'll close the year over 30,000 financial advisors across each of those different models.
That's incredible. And I guess, I mean, what you just laid out was to have that many, to be able to accommodate that many advisors in a platform, you got to have different choices. And so yeah. I think I've heard you on a different podcast say that when an advisor affiliates with LPL, I was kind of surprised. Is it 80%, I think you said, go into some sort of community? Maybe it's an institution, maybe it's a large enterprise, maybe it's is that true?
We see a lot of the net new flows that are coming into the firm going into more community-based type of environments, whether that is our Linsco W2 community or it's our strategic wealth community or somewhere else across the firm, but including enterprises and institutions, of course. I think that it's human nature, Jimmy, for an advisor to want to belong to something, for a human to want to belong to something and feel a sense of belonging. And so for us, it's been really important for us to be able to build up the ability for them to have access to the platform, but not feel as though they're lost in a big ocean. Instead, how do we create these smaller communities that give them the benefit of what LPL at large has to offer, while still tapping into more personalized experiences and access to their peers in more nuanced and kind of boutique approaches, as opposed to just coming in, tapping in, and now suddenly they're one of 30,000 or so. That's not a great feeling. And so instead, how do we build up smaller communities based on similar profiles, similar features that they have, whether it's geography, which tends to be easy, but maybe not the best way to connect with people, or it's things like their specialization. We've seen a community grow up inside of LPL of advisors who specialize in serving families with special needs children, for instance. Or we have a community of advisors who specialize in serving pilots. And so those types of communities become really powerful because you can be in a group of 30,000 accessing a really strong platform and benefiting from the economies of scale, and all the scale allows us to be able to invest and build out while still knowing who your people are. In the broader community that you're actually better connected to.
Maybe it's a good time then to segue into the Commonwealth acquisition, talking about communities, because I've read some articles that Rich has been made statements in, and then I heard that at Masters he was talking about how, and also at the Commonwealth conference recently, talking about how LPL has acquired some firms and kept those communities in place, for those people that know each other. And I hear that's kind of part of the strategy anyway with Commonwealth, along with all the synergy that comes with joining an LPL, right, in the long term. You want to go into that a little bit more and then let's talk about it. I mean, it's the big news, right? It is surprised a lot of folks. Didn't really surprise me that much, knowing the setup of Commonwealth being a family-owned business and needing to do something. I will say this to all the Commonwealth advisors, my friends of mine that are there. LPL's tech platform is amazing. For most of us that have brokerage clients and advisory clients, it's amazing to be able to do business back and forth very easily. So I think that, some of the criticisms out there that you may have read in the news around LPL and being too big or tech or something like that, I got to be honest with you, and I'm not trying to just plug LPL since I've got a partnership with LPL. It's a great platform, and I've cleared at NFS and Pershing and all that, and I think there's an advantage to be self-clearing. So when it comes to self-clearing firms, you really only have a couple of choices, and other choices I won't mention, probably for compliance reasons, really aren't that independent. That's my opinion, personal opinion. So Mark, let's get into the Commonwealth deal, because I know you guys have large aspirations or big aspirations in terms of retention, how that all looks. But go ahead.
Yeah, let's talk Commonwealth, Jimmy, and then maybe this conversation will start to move towards some of those independent firms, quote unquote, that aren't so independent as well. Because I got a lot of thoughts there too, my friend. So when you think about Commonwealth, the reality is it's not every day that you have an opportunity to combine businesses and to acquire a firm that is as well respected among their client base and among the community as a Commonwealth is. And the reality is they deserve it. They've built an incredible culture inside of that organization. They've delivered an extraordinary client service model, which is reflected in their satisfaction rates that have been industry leading for many years. They've won the J.D. Power Award 11 years in a row for best service model in our industry. And it's an amazing experience that they've built. As I've dug my hands in there and started to understand a little bit more what it looks like, what I see is unique inside of what Commonwealth has built. And Joe Deitch and Wayne Bloom and their leadership team have done a really amazing job here, is building and perpetuating this culture of accountability, where every single employee at Commonwealth has a sense of accountability to the issues and the matters and the cases that are brought to them. So an advisor can talk to anybody at Commonwealth for the most part and know that they're going to get a response. They're going to get a response pretty quickly. They're going to be able to have that conversation. But then whatever it is that they're talking about, that person's going to take ownership of, and they're going to follow that through all the way to fruition. And they're going to communicate with them along the way. And unfortunately, that degree of personalized service and attention and accountability to the client experience just doesn't exist everywhere. And quite frankly, there's a lot that we can learn from what they've done. And we are actively learning from what Commonwealth has built that we'll continue to incorporate in to the LPL experience so that the other 29,000 advisors who are here can benefit from some of those learnings as well. But when you think about it at large, this is a really cool opportunity for us to learn from, and the community, the overall LPL ecosystem, to benefit from some of what Commonwealth's done really well, much like I was just alluding to, but also for the Commonwealth advisors to be able to benefit from what LPL has done really well. And when we think about that combination, it puts us in a spot where, with the scale that the acquisition brings, with the additional learnings that we have from Commonwealth, it gives us the ability to make this platform even stronger. So we're taking some of what Commonwealth built into Advisor 360 and some of the capabilities from a technology standpoint that they've built, and we're incorporating those in for LPL advisors. Things like, Jimmy, you and I have talked in the past around this concept of a client relationship agreement, where instead of you having to have a separate document, a separate agreement for different advisory platforms and a separate one for brokerage, you have one agreement for that overall household. And then you as the advisor can manage, using your discretion, what advisory platform or strategy are we utilizing? Or do we want to move this from brokerage to advisory without having to go back and get another client signature? Enhancements to our householding capabilities. And these are things that we're learning and we're bringing in and incorporating that Commonwealth's done well, that all LPL advisors are now going to be able to benefit from, in addition to the Commonwealth advisors benefiting from the strength of the platform. I agree with you. The technology investments we've made have left our ClientWorks platform, our advisor workstation, in a really cool spot, where, as we're sitting through demos with Commonwealth advisors, for the most part, there's oohs and ahs and whoa, you guys did that? That's awesome. Things like artificial intelligence and other capabilities we've built in. There's a few nuanced things that they say, well, it would be great if this too. And those are the things, like I was just alluding to, a couple of them that we're going to incorporate into the platform for the benefit of everyone on our journey to being that best firm in wealth management.
Yeah, I think a lot of I think a lot of advisors at LPL know this, but LPL, I think, invests $500 billion. I'm sorry,
Half a
$500
billion.
million.
Half a billion.
Sorry, uh, $500 million in tech and platforms annually, and it's an incredible number. And so, my experience over the decade or so that I've been affiliated is that it's gotten better. And once in a while, we have the rare shutdowns on some things, but that's rare and more rare these days. So I think everything's gotten a lot better. I think that also I actually believe that service from when you're actually talking to people, like you say with Commonwealth, that I've experienced as a big improvement too over the last decade. So anyway, I think you guys have done a great job of doing a lot of things that you say that Commonwealth is good at. And a lot of times I'll ask our team, how often are we having issues, our operations teams, how often do you have to actually talk to somebody because there's a problem? And because the technology is pretty darn good, there's not a lot of interaction that you have to have. And so I think that makes everybody more efficient and satisfied. So if you want to add anything more to it later on, let me know if it comes up. But I do want to go back a little bit into who you are a little bit. You have had an interesting career. I mean, you spent a long time at Market Council, so you know a lot about RIAs. You know a lot about breakaway advisors firms. You've helped out a lot of advisors go independent, set up their own RIAs. Tell us a little bit about your history and how you ended up, in the role that you're at now for yourself.
Yeah, so Jimmy, it gets pretty interesting when you go back in time. So I was born in New York City. I was raised in northern New Jersey. Imagine me as a 17-year-old kid. I had a little bit more hair on my head at that time, and I just got my driver's license. I needed a little bit of gas money to be able to drive the new car that I had gotten around, and I started looking for a job. I ended up getting a job at a law firm and business consulting firm that happened to serve RIAs. I was one of 6 employees at the time, and I was taking out the garbage and answering the phones and doing some filing after school every day. Well, that after school job over time, I built up some relationships. The firm started to grow, and it turned into more. And I've got more and more responsibility where I graduated high school, continued to work for them remotely from college down in Washington, D.C., commuting back and forth to northern New Jersey pretty regularly. Graduated, continued working there. Becoming one of the 2 leaders of the firm, really running the business, and that was Market Council. I had the opportunity to do everything from leading the sales team and engaging and consulting with advisors who were contemplating a breakaway or thinking about how they should start their own RIA, all the way to serving as a strategic advisor to them and learning the industry and the ins and outs of their business. To help them on an ongoing basis. And then, of course, imagining what exit or succession could look like. Fast forward a number of years, and we hit 2017, 2018. One of our large Market Council clients and one of LPL's largest clients was contemplating a unique business opportunity, brought me in and brought some of the LPL leadership in to consult with them on that opportunity. Gave me the chance to start to really meet and understand LPL. I'll tell you, where I was sitting at that point, all I knew about LPL was that it was a good feeder for my business. I saw a lot of advisors leaving LPL, starting their own RIAs, but I didn't know LPL for LPL's sake. And the opportunity that this client afforded me by bringing us together in an intimate environment, which then ended up creating a strong relationship with the LPL leadership team, gave me an opportunity to really see the transformative thinking and the progressive entrepreneurial nature that existed inside of the culture here. So our CEO at the time invited me to come and join the firm, and leading the expansion and the transformation of this firm from that legacy IBD into a more progressive wealth management partner for advisors. And so that's where we've introduced a number of those new affiliation models that we were talking about a little while ago, some additional new capabilities and solutions for advisors across our business services, across succession and capital or liquidity type of solutions that they might be looking for. And then a few years ago, I was asked to broaden my perspective, take on our entire corporate strategy function, which led, as you alluded to earlier, to me being invited onto our management committee, where there are 7 of us, including Rich as our CEO, who have the opportunity to lead this firm into where it is that we're headed. So that brings us to today.
That's cool, Mark. I mean, I looked at your resume in terms of the time that you spent in different roles. Obviously, what you can see is that you're effective. So, you go from well, at that firm, a lower level job into a COO job, and
Yeah.
then here at LPL, SVP to managing director very quickly. So, relatively speaking, I know you're a young guy. Um, besides work, I know you love work.
Yeah.
What do you? I know besides the Mets, what else? What else do you like? What do you do for fun? What are
I'm
your
a big
hobbies?
Mets fan. Steve Cohen is not my uncle, even though I might claim it every once in a while. So I'm a big baseball fan. I have a 7-year-old son who lights up my life. I've been married for 10 and a half years. And things are good. As a family, we enjoy living in Southern California now. We moved out here with the change to LPL at the end of 2018. Take advantage of some of the theme parks that my kid enjoys, and I'm a big foodie. Enjoy everything from collecting Michelin stars at some of the best restaurants in the world, all the way to finding a hole in the wall or a food truck that's just pushing out really good quality. And so some people say that they eat to live, to be able to sustain themselves. Well, you don't want to see what my food budget is every month, because I definitely live to eat.
Wow, you must have good genetics, man. You're not a big dude. And your wife must be very happy with you. I heard you on a different podcast that getting out of the East Coast to the best place in the United States, San Diego, wasn't a bad deal either, right?
No, not so bad. We had traveled to Southern California a couple times prior to having our son, and each time just came out for vacations. And each time she said, "I don't want to leave. I don't want to leave. I don't want to leave." And so when the opportunity presented itself, I think she had her bags packed within a few minutes, even though we weren't moving for months.
So I think it's really cool that you have the background that you did, in the industry, and now you're with LPL, implementing a lot of things there, and you guys have moved fast for being a large company with so many people to be able to innovate as quickly as you have and come out with new channels, affiliation channels, new programs so fast. In my opinion,
Yeah.
it's usually not it's not normal. I think in a big company usually with large companies you have a lot of bureaucracy,
Yeah.
and so I think based on listening to you talk, listening to Rich talk, other leaders, you guys really look at this business and try to like put yourself maybe not just in the wealth management industry, but look at other companies and other industries that really succeed and crush it, and try to implement a lot of the same kind of strategies. It sounds like to me when I've
Yeah.
listened to your leadership team. So that being said, what's your view on what the industry is going to look like down the road? And obviously, LPL, your vision of being the best. With your perspective, with all the private equity going into our space, I too do not believe that the independent financial advisor needs to be consolidated up to exist. But
Yeah.
how do you see that? How do you see the industry looking longer term out there? What's going to change with the wirehouses? What's going to change with all these large RIAs and aggregators, BDs? Obviously, there's going to be more consolidation. But what's your view on that?
Yeah. So I think if you think about the wealth management advisor mediated space on a spectrum, you've got the wirehouses on one side, where think of that as probably most restrictive environments. They're incentivizing the cross sale of some of their proprietary products or other lines of business, and largely getting to a place where they are prescribing what the client experience looks like, and how it is that you're managing your client relationships over time for many advisors. On the other side, you have a DIY RIA business where you've got a custodian. And I think the challenge that RIAs face there is that, as we've seen over the course of the last decade, those custodians are increasingly pulling back the level of support and service that they're offering to independent RIAs, particularly the closely held boutique type of RIA that this industry was originally built on over the course of years, and focusing their relationship experience and investments more on the large tens of billions of dollars size firms. And so that leaves the smaller firm in a very precarious spot of really having to kind of figure it out themselves. And on the other hand, those firms, those large custodians, at the same time have another channel that they're typically running that is more lucrative for them than the RIA channel is, and that's their retail business. And so we see increased competition there from the retail business, really competing for end clients from the RIAs. And so I think there's some meaningful conflict to watch out for there. In the middle, you've got a whole bunch of other types of models. You've got everything from regional BDs to independent BDs to large RIAs themselves. And I think if we look across all of those, we haven't seen as much consolidation in the regional broker-dealer space. I think we'll start to see more of that over the coming years. I think in the IBD model, you're not going to see IBDs anymore come a few years out from now, maybe closer to the end of the decade. I just don't think that business model is going to exist any longer, where it's far more restrictive, kind of gated community with walls around it in a BD construct. I don't think that's going to exist. I think you're going to see more of these larger RIAs existing and kind of growing largely through the consolidation that you were referencing. The risk that I see there is that when I talk to the leaders of some of these firms, they themselves refer to themselves as mini wirehouses. And what that tells me is kind of a trend of reverse independence, as opposed to what the RIA community has been for years now, which is a highly independent type of community. I think you're seeing a movement towards reverse independence there, and probably a little bit more kind of philosophically aligned to where the wirehouse space is that I was talking about a moment ago. And to me, that creates a risk. That creates a big risk for the overall advisor ecosystem, because nowhere did I just describe something where advisors can maintain their independence and their closely held boutique operations in any of those models. And so I think you're going to see a reemergence of an independent platform, shared ADV type of model, so that they don't have to worry about their own compliance. We see the SEC making some suggestions over the last month or two about raising what the registration threshold is for SEC registration up to about $1 billion, which makes running your own independently registered RIA below that level a little bit more complex with state registrations. You're going to see a little bit more difficulty, I think, with technology integrations and how to manage operations. So I think this independent platform that years ago existed over time was infused by private equity money, turned into these large aggregators because they wanted to expand out what their economics were by buying down advisor payouts and increasing their own cash flow. I think you're going to see these independent platforms reemerge. LPL primarily, a little bit of bias here, but LPL primarily chief among them. And that's how we're already seeing some of our growth. It's not as that legacy IBD. We don't think of ourselves that way anymore. We think of ourselves as a large RIA platform where you can either choose our shared ADV model, you can choose our custody model, you have optionality like we were talking about before. But the beauty of it is that you have the support services available to you in the way of integrated technology, in the way of support for comprehensive advice. If you need estate planning support or tax support for your clients, or just paraplanners to help you with turning out financial plans, business support to help you run sound businesses, all with the benefits of continuing to maintain your ownership in your closely held business, and the benefits that come with that, and maintain your autonomy and your ability to make the decisions and your control to make those decisions as to what's best for you and best for your clients. And Jimmy, you and I were talking about an article I wrote that was published in Barron's earlier this year. I really believe that the challenge that's going to be placed in front of our advisors for the next several years is when they're walking through the grocery store or they're at the soccer field with their kids and they see one of their clients there, can they look their clients in their eyes and say, I'm in a position to serve your needs best? Or are they in a spot where they're saying, I put myself in a difficult position and now my firm is dictating how I best serve you, or my firm is encouraging me to sell these products or to operate in this manner, and I don't know that I have full autonomy to be able to do that in the way that matters most for you to look out for your benefits, because that's what true independence is for an advisor. And I think that there's going to be fewer and fewer firms that can really say what I just said and empower advisors to be that strongly convicted around their independence. But I think it's important, and we very, very firmly believe in that concept of advisor independence to deliver personalized advice to all Americans who need it.
Man, I'm looking at LPL stock price right now. Pretty incredible. Coming off of Q1 earnings, both short term. What's your team focused on right now? And then a little bit more longer term, Mark. Are there things that you think we need, in the LPL ecosystem to be even more competitive
Yeah.
as advisors? And maybe if there are, maybe you can talk about some of those in the future.
Yeah, totally. Very near term, Jimmy. I was talking before about our strategic vision and some of the important areas of focus that we have. Um, one of the pleasures that I have in my role at leading strategy here at LPL is that we get to host a 2-day offsite with our board of directors early summer every year, and so we're gearing up for that right now. It's going to be at the end of June. Where we'll go to an offsite location, bring our management committee, bring our board of directors, and we'll host an ideation session. There's a lot of work that goes into it, but it's intended to be able to position us to think through what do the next several years of this firm look like? What are the stair-step transformative opportunities that might be in front of us that we could potentially go and pursue? And it's a lot of fun when you look at the caliber of professional that's sitting on our board of directors, to be able to engage with them and learn from their experience, to be able to really kind of feed into the development of some of these concepts and opportunities. So very near term, that's what we're largely focused on. In addition to thinking through some additional opportunities like the Commonwealth opportunity and what can we learn from them and what does that mean for LPL at large. And then finally, we were talking before about business services and the support structure that we have with these different tools. Well, I think there's an opportunity for us to be able to take those unique capabilities and get them in the hands of more advisors than we have historically. We have a couple thousand advisors using these different tools, but what if we were able to get it so that all 30,000 or close to all 30,000 had the ability to lean on us and be able to benefit from some of the data and the insights and the capabilities and the intellectual property that we've built out to help them run their businesses better and be able to better support their clients. So we're very, very focused on how do we broaden out the value that we've built there to put that into more hands. A little bit longer term, you ask, where are the opportunities for us to maybe round out the offering and improve our positioning in the marketplace? There's a couple of ideas that come to my mind, all under the umbrella of better serving high net worth investors. If you think about those opportunities, we can do more in the areas of banking and lending. I think we could probably continue to do more, even though we've done some pretty awesome work with making more alternative investments available for our advisors. I think there's even more that we could potentially do there. I think there's more services that we can bring in, focused specifically on the high net worth and the ultra high net worth investor opportunity set. Because just like many of our other advisors, just like many of those that we're talking to who are today sitting at wirehouses or at other firms, looking for independence and looking for a platform like what LPL can provide, are increasingly seeing those higher net worth opportunities. And we can lean in with that integrated solution that can make them that much more powerful in those opportunities in a stronger way than we have before. And you'll see more of that coming out later this year and into next year, with some proprietary lending capabilities and better banking capabilities, and continuing to focus down on where we can show up better there.
You know what? I was hoping you were going to say that without knowing you were going to say that, because this was not pre-planned. But I think those are two key areas that would help capture some of those advisors that are working with higher net worth folks, that use a lot more alternatives, that use lending and banking and other things. And so that's awesome. Maybe that's via an acquisition you guys might do in the future or not. I don't know.
Or we might just build it.
or we might just build it. So whatever, I think that's awesome. How about AI? What's your personal view on AI and how it's going to affect the advisory space? And then I don't know, to the degree that you guys are leveraging AI at LPL and what you're thinking about that.
Yeah. So I think we are in the very, very, very early innings, maybe even batting practice, with what the impact of artificial intelligence is going to be here. The way that we talk about it, think about going back a couple hundred years with the invention of electricity. And now you look around your life and those lights that are sitting above your head and the computer that you're operating on and the watch that you're wearing, probably everything's just feeding off of electricity. It's everywhere. I think we see a future where artificial intelligence is the same as electricity, just feeding into all aspects of our lives and our work. That all being said, I pretty strongly believe in this concept of the bionic advisor that the industry's talked about for close to a decade now and hasn't really materialized. But I think we're on the precipice of where we're going. I do not believe that AI is going to eliminate the role of an advisor. I believe that the advisor sitting at the kitchen table or at the country club across from their clients and sitting there in the moments that matter to help them through their life's events is not going to be able to replace by a machine. The EQ that requires to sit there and build an emotional relationship with someone, a computer is not going to be able to replace. But I believe that the AI and the computer, the digital systems, are going to be able to help make those opportunities far more effective, far more accurate, and far more efficient. To be able to give advisors the ability to either serve more clients or maybe live a more balanced lifestyle with whatever their personal pursuits might be. As you think about the world inside of LPL, AI is playing a big role here. You already see AI pretty strongly embedded into our ClientWorks Advisor Workstation. Right on the homepage for our advisors, you've got our Next Best Action or Advisor Insights tool that's constantly looking at your client accounts and your client relationships and prompting for you next actions that you can take or new opportunities to better serve those relationships. And that's all rooted in automation and AI. You see other opportunities sitting into the trading tool and reporting tools that are all based in artificial intelligence and how we're exposing that to advisors. And you're going to continue to see more of that. But then also for our own internal teams, our sales and recruiting team are largely powered by artificial intelligence, feeding them more information and recommendations for the recruits that they're talking to. Our service center is supported largely by artificial intelligence to help ramp up our service center professionals more quickly so that they can get to the front lines and take calls a lot more quickly than they otherwise would have through their traditional training experiences, but then also feeding them information and helping make sure that they've got the right answers at their fingertips when questions are coming through. You can think about operations and straight through processing and how do we make sure that move money requests or new account opening or the like is more simple. All of that has artificial intelligence built into it to be able to really accelerate the pace at which advisor operations are getting completed. And ultimately, you can serve your clients effectively.
Yeah, it's amazing. I mean, even today, just the ability to bring on a new client today using the technology that we have available now compared to, I don't know, when I got into business so long ago and how many hours it took to do paperwork and so forth. It's incredible. I just can't imagine how much more effective we can all be as advisors with implementation of AI and serving clients and down the road and all that. I did want to ask you about something you wrote on LinkedIn.
Jimmy, it's amazing when you think back, like growing up and watching like the Jetsons, for instance, and imagining what the future could look like with robots running your household and the like. We're starting to live into that. You see firms like Salesforce.com literally eliminating full teams. They eliminated most of their HR team at the end of last year and replaced it with AI agents or AI bots to engage with their team when their team had human resources questions. And so we're starting to live into that future that we kind of saw as funny on TV that's now becoming a reality. We're not there just yet at LPL, but just wait.
It's crazy. I mean, do you listen to podcasts?
Yeah.
I listened to the All In podcast, and it was and I'd seen this before, but on that one of the podcasts last year, I saw some advertising for a humanoid. So I'm committed to buying one now. I think you can buy one as low as like around 20 grand, and I want to try to see if there's a way to program it to have the intelligence, the financial intelligence of a Harvard PhD finance professor, and maybe the EQ of like an Oprah Winfrey or something, and figure out how, I just want to have it sit in the office and see what's going on with that. But
it's fun to play with.
Yeah, the technology is just, I think it's going to continue to evolve and just get crazy. And it's hopefully, and I know it's going to have make a lot of improvements to the client. I think the client, investor, advisor experience and so forth for our industry. So I'm looking forward to that.
Yeah.
I did want to ask you about a post I read that you wrote on LinkedIn about this, about independence and kind of getting into this public dispute that LPL has with Ameriprise. It's kind of funny because obviously, I recruit a lot,
Yeah.
and chime in on that. Let's talk about that, why you wrote that, and your belief on independence and why it's important, and so forth.
Well, Jimmy, it goes back to what I was saying before. I see, just by stepping back and trying to look at this industry objectively, I see an increased movement backwards towards consolidation, kind of prescribed experiences for advisors. I see firms increasingly espousing that they believe and part of their core values are independence, but then at the same time suing advisors as they're walking out the door. There's an RIA aggregator in the Midwest that right on their homepage talks about how they're an independent firm, but they've got multiple lawsuits going on right now with advisors that left the firm, citing that those advisors can't leave and take clients with them. And so I see all of this happening. You've got the Ameriprise situation where we believe Ameriprise kind of overstepped by coming after advisors and notifying their end investors of potential data breaches, so to speak, 5, 6, 7 years after a transition event had occurred. And it feels a little bit like being a bit of a sore loser, to be totally honest. And the reality is, I think this firm will continue to stand up for independence. We believe in the importance of independence. To me, independence means that you are limiting conflict and truly operating in your client's best interest with the control and the autonomy to do so. And when you have a firm that is sitting out there pounding their chest saying that they have an independent model, but then they're suing advisors on their way out the door, or they are challenging whether the advisor has the right to serve that client and talk to that client or not, that's not what independence is about. And that goes back to the soccer field and the grocery store aisle that we were talking about. We believe at LPL that if you're independent, that you are in the best position to be able to serve your clients' needs on a personalized basis using your own judgment and perspective on what is best for that client, not somebody else's, no conflicts that guide what products you're using or how you're engaging with them. And if you're independent, that you should truly be able to be independent and choose your partner. And the reality is, it would be easy for us to say the opposite. It would be easy for us to say, no, those are our clients, you can't take them. But that's not how we operate. We recognize that we need to show up every single day to win your business. That you, Jimmy, have the opportunity to lift and go somewhere else at any moment with your clients if you wanted to. But that we need to win your business. We need to earn your business. We need to earn your trust and your partnership. And that's what independence is all about. And if we have the opportunity to earn that, we're going to put our heads down and do our darndest every single day to make sure that we're showing up in the best way possible, because we know you have the flexibility to go somewhere else. And you're choosing not to because you believe that LPL is the best partner. But if we fall down and trip over ourselves and roll down the hill, you're going to go somewhere else. And we recognize that. So we can't do that. We need to take the steps not to. And we see a lot of folks in the marketplace espousing and talking about independence, but not really living into it when push comes to shove and when they're challenged into it. And I just think it's important. That's a newer development. It's important for us to shine a light on that across the industry and make sure that people really understand that just because someone says independent doesn't mean you're really independent. That it's important to start asking some questions and understand what underlies it.
It's interesting you say that, and the points you make now that are very relevant today with everything that's going on. Firm pulling out of protocol and things like that. Advisors would know that do recruiting would understand that. But 11 years ago, 12 years ago, when I was looking around at making a change and setting up an RIA and wanting to be independent, more independent, fully independent, I didn't go talk to the firm we're talking about now, but there are some other self-clearing. So one of the things I wanted to do was to go to a firm that had a clearing firm, so that you'd have a lot more control over whether the money was being custodied, right, in the accounts.
Yep. And
so that leaves only a few, right? And in the other ones that I won't mention, aside from the one we're talking about, I don't know. I think they're very, in some cases, closed loops. They're not as independent as they say. We run into it all the time when we talk to advisors at those firms. And so I can say that over the 10 years or so, for the advisors that are listening, not everything has been perfect at LPL, from my opinion. That being said, the management does listen. you do have, as big of a firm as this is, you actually have access to the top level people like yourself. You guys are at the meetings. You guys do interact with your clients. And I think a lot of my friends and advisors at LPL have a chance to get to meet people like yourself, other leaders, and have built great relationships. I think there's a lot of trust in that. And so anyway, just encouraging you guys to continue to do that. I know you will. I know that's important to your leadership team to do that. And so for everybody else that's listening, for as big of a company as this is, the leadership team is accessible, and a lot of people in the field have relationships with the leadership team. It doesn't mean that you have to be a gigantic producer or advisor to be able to do that either, by the way.
Yeah.
So that being said, I wanted to ask if there's anything else that you thought, from an advisor standpoint, things that we should be thinking about. I mean, for us, Marc, one of the things that's really become clear is we've had two deaths in our firm in the last 24 months, and a lot of things I'm concerned with that. But succession, to me, should be on the forefront of every financial advisor. There are so many of us in our 50s and 60s that have loose, succession agreements. And I think for many advisors, their most valuable asset is their business, the business value of their business. And so paying attention to that for us and for our advisors is really important. Are there other critical things that you think right now that we need to be thinking about as advisors?
Jimmy, I think you hit a great point there. Succession and business continuity, I think, is super important. Understanding if you got hit by the proverbial bus, what happens to your business, and is your family properly taken care of? Super important. I think that we are seeing a trend towards increased support. The cowboys that had gone out and started their own RIAs and had gone fully DIY years ago, I think we've kind of evolved past that. And so we're seeing advisors looking for more help, more comprehensive support. I think the advisor business is being pressured by more comprehensive, holistic offerings that are being offered in the marketplace to their clients. And so that's where having a full suite of services where you can holistically serve the needs of that high net worth client becomes really important, so that they're not going sniffing around looking for another provider to help them with one area or another, but they're able to really show up almost in a, think of it almost like a democratized family office type of experience where one-stop shop, how can we help you? And that's an area that LPL can help plug in with white labeled solutions so that the advisor doesn't have to do it themselves. But above all, I think you've heard me say it, independence is kind of under attack to a certain extent. And as independent advisors, I think asking smart questions and looking under the hood and really understanding when you're being solicited or when you have opportunities being presented in front of you, what do they really mean? And how do you have the proper advisors around you, similar to the role that you play with your own clients, to be able to help you make those sound decisions becomes really important so that we can continue to serve the public in the way that they deserve and in the way that best fits their needs through an independent model that we believe is the best way to do so.
Marc, I think I'm 3 minutes over our time. I'm sorry, I apologize, but I really want to thank you for your time for doing this and appreciate the relationship. And thank you very much and hope to have you back on at some point in the future.
More than happy whenever it makes sense. I hope that was great and helpful for you, Jimmy, and any of the listeners. And I look forward to seeing you soon. Thanks for having me.
Come and dance on our floor. Take a step that is new.